Hi everyone, Michael here. In today's video, we're going to go over the latest stock market sell-off in the ASX, the Australian share market, because I haven't really done an update on the Australian stock market in quite a while, and I'm sure all of my Australian viewers will definitely like to know my thoughts and opinions, what's going on with the Australian stock market and why it fell so much today. If you haven't seen the news, the ASX fell around 2.2% at its lows about an hour before the close, and it finished down 1.9%. And it's not just Australia. As we're recording this, the European stocks are down around 1%, and the futures for the US market are down around 0.5% as well. Because what you have to know is while we've been in a very strong recovery, it looks like the recovery is about to make a sharp turn. Global growth is looking like it's going to be weaker. Stimulus is being taken away, which has been the story that's lifted the stock market up because of all the stimulus companies' earnings went up, people had more money to put in the markets to lift it up, and there was really no other alternative to park your cash. But in Australia, with the extended lockdowns in New South Wales, Victoria, ACT, and still with uncertainty when exactly things will get back to normal, this is ruining confidence and investor sentiment. But okay, everybody, let's get straight into the facts, the news, and the data. So technology stocks led the way. They were down 3.2%, and this reflects the weakness with the NASDAQ, the US stock market, with their tech stocks having some losses last night, where it was down 0.7%. But the Hong Kong Tencent fell as much as 6.4%, and this is its biggest drop since August 3rd. So it says here there's a few shifting parts in the markets right now, but the big narrative has been the softer growth outlook and flattening trajectory for global economic expansion. And the ABC seems to agree, and it shows here that $50 billion was wiped off the value of the ASX as the confidence about global growth weakens. But people, there's something huge that's happening right now for the Australian economy that not too many people may be paying attention to, besides my viewers here on the channel, because I know you're all interested in economics and the economy and how the markets work. What pulled us out of a recession in 2008 and also in 2020 was our booming mining industry and commodities. But with China's growth slowing and iron ore prices plummeting, we won't have that to pull us out of this recession. Because we'll have a look at the chart here, everybody. We can see iron ore was down 2.9%, and it's fallen from a peak in May 2021 of around $230. Now it's fallen down nearly 45%, all the way down to $132. But what has been offsetting that is coal. Coal has gone from around $55 in September 2020 to now $177. But if growth continues to slow in China and coal starts to fall, well, this is going to be a huge hit for our economy. Because what you have to know is with the mining industry, it contributed about 10% of Australia's GDP in 2019, and you can see it added around $206 billion to our gross domestic product. So even though I'm not really interested in mining that much, all the mining industry, we do have to pay attention because it does have a big effect on the Australian economy and the markets. So we can see here that the miners took a hit. BHP dropped 1.7%, Rio Tinto down 2.5%, and also the travel stocks, Flight Centre down 2.1%, Webjet down 3%. But also another industry that could be facing the headwinds, which is a huge industry in Australia, is the banks. The big four banks. They make up a huge part of our economy with lending to businesses, consumers, and especially the housing market. And so along with mining, construction, and the housing market, those are three huge pillars for the Australian economy. And we've had booming house prices in late 2020 and early 2021. Now, I don't expect a crash soon, but I do expect growth in the housing market to cool. And so then that's more bad news with mining going down and the housing market going down at the same time. So Commonwealth Bank fell the most. That was down 2.3%, NAB 1.6%, and ANZ 1.8%, and Westpac down 1.9%. And the reason why that may be is because if consumer confidence falls and the housing market does cool, well, then that's less business for the banks. Also, something that would actually hurt profitability for the banks, but may be good for the markets like the stock market and housing market, is if we do enter into another recession and the RBA goes into negative interest rate territory, well, then that's really bad for the bank's profits. But I'm sure the RBA, the Reserve Bank of Australia, will find some scheme to give the banks money, like the term funding facility. Now listen to this, everyone. So Miss Lee, she's a popular stock market analyst. I'm sure you've seen her on the mainstream media. So she noted that the stocks markets were trading near record highs, which were pretty much at record highs, and they are due for a correction, which is where the stock market falls at least 10% from its peak. And so she's normally bullish. And so what are we starting to see now? We're seeing more and more people that are normally bullish in the stock market, they're now even admitting that valuations are getting too hot, especially now with no more stimulus, with global growth falling, and it's looking like companies' earnings will fall because consumer confidence is falling. But also listen to this, what she said. The market was a sea of red as concerns around the Delta's impact on growth. Numbers out of China supported stagflation. That means lower growth and higher inflation, which we're pretty much having in many economies in the world now, with CPI lower than expected, but PPI higher. Because what have we seen out of the US? Growth is around 6% of GDP, but we're seeing CPI around 5.4%. Again, in Australia, GDP growth is looking weak. We had just a growth of 0.7% in the last quarter, and it's looking like we're going to fall negative this quarter. But we've also had a CPI of 3.8%. So that is stagflation, where the economy is growing, but it's either just keeping up with inflation or it's actually not even keeping up with inflation. Also, NAB is saying the lockdowns are taking a toll on people's finances. He said the number of customers in financial hardship has risen since the outbreak of this current variant of the virus. And many businesses are in a state of hibernation, waiting for restrictions to open up and ready to get going again, he said. Well, everybody, how quickly can sentiment change in the markets? Now, I'm not expecting, a huge 50% crash in the ASX stock market, but I do think, like many of these analysts are saying, that a 10 to 15% correction is pretty likely with slower growth, with slower earnings, and with high valuations. Again, some headwinds for the Australian economy, besides lockdowns, is weaker commodity prices, a weakening mining sector, and even though I don't expect house prices to fall anytime soon, not this year, maybe middle next year, if growth does slow in the housing market, well, then there'll also be slower growth for the Australian economy and also companies' earnings. And still, there's so much uncertainty around the pandemic and how we're going to live with it. So everyone, that was just a quick update why the Australian stock market was falling today, a little bit of insights with what's happening with the Australian economy and some headwinds that's coming for the future. What do you think is going to happen? Let me know. Thanks for watching, everybody. You're awesome. I'll see you in the next video.